see Facebook. I'm just gonna see if it allows me to see. Oh, I think I saw it. Yep. Perfect. Good morning, good morning, good morning, everyone. Let me see. Good morning. Hope you guys are good. Hope you had a relaxing weekend. What is it now? 14th of January. Can you believe it? 2 weeks in. How on earth did I feel like I've been teleported or something into the future. Hope you guys are good. Just gonna wait for a few more people to roll in and get it started. Some of you are having a mid-morning break or something, or you're working from home or working somewhere where you're able to hear, or you're not working at all. That's cool. So yeah, a lot going on in the market, guys. Did you see the drop on BTC yesterday? Oh my goodness. I'm gonna get into it in a second. Just gonna wait for a few more people to roll in. So yeah, guys, let me know how your weekend's been in the comments box. And from time to time, I will be looking down at my phone to see if if there's any questions or comments. 'Cause sometimes for some reason I don't get tagged. Yeah, I could see now. Brandon Jones, welcome. Good morning. Good morning. Finally fixed the thing, because it wasn't showing the comments before, the Facebook comments on my end. So I hope you're good. How you feeling, guys? You ready to start this week with a bang? Speaking of major developments, tomorrow is actually the vote for Brexit in the Houses of Parliament. So they're going to decide if they're going to do a deal or no deal. They're going to accept the plan that's been proposed, and the market's expected to be super volatile. I think it'll be defeated. I don't think the government will have enough support. They're not going to get enough votes, and I think the market will go down with the GDP pairs. But anything can happen. Nothing is ruled out. But anyway, let's get back to crypto. And I mean, it's been mad. We've been praying and hoping that 3,600 BTC level will hold that critical support, at least to give the market some level of confidence that it's a proper support level. But it got broken, and I'm just looking at the comments. It's freezing cold over here, says Brandon Jones. Where are you, Brandon? What city? You know what? Let me hold my phone. What city are you in? What city are you at? You East Coast, West Coast? And I guess if you're West Coast, you still have some winter what do you call it? Winter weather. But not as severe as what Ohio, New York, Chicago has, apparently, because some of my friends that live there just said it's terrible weather there during winters. Is mad. Yeah, so anyway, let me get right into it. So man, you tell me what your thoughts are so far, how you guys are surviving the crypto winter, what you're doing so far in this crazy times. So yeah, guys, if you're waking up to the market, waking up, if you well, actually, yeah, when you did wake up, you would have seen the market was in the red. Even up to now, still no movements, hardly any movements from the 3,500 50 something level that I saw. Indianapolis, Indiana. Okay, Indianapolis. Okay, it's a bit of a Indianapolis. Okay, that's hang on. Isn't that Michael Jackson? Gary, his family were raised, I think he was born and raised in Gary, Indiana. Yeah, Gary, Indiana. Correct me if I'm wrong. Or for some reason, I was thinking it might be Detroit, Motown, where Motown is was founded. But no, I'm pretty sure it's Gary, Indiana, because I've watched a lot of these documentaries before. Um, when I was way back, maybe 10 years ago or something, a documentary on Michael Jackson. But yeah, it must be freezing out there. But yeah, you're not alone there. London, UK, we've got some cold weather. That's correct. Yeah, see, I do pay attention. Okay, so I can't think of anyone who else. Oh, I'll speak to you about that another time. Who else is from Indiana? Fame. You know, I'll come back later. So yeah, market has been down. Apart from stable coins and other projects like Revain, what was another one? Tron, Aurora, Holo, Chainlink. I know Tron had some fundamental positive news come out. They were integrating BitTorrent protocol. So even they weren't immune to some of the fall as well. So wherever BTC goes, the rest of the market does follow to an extent. So unless something isolated is happening specifically to do with the project, so they've if it's something to do with the partnerships or some upgrade happening or something positive that is going to add value to its prices, to its you know, add any sort of value to its long-term prospects, and that would be reflected in the demand at the time. That would only be for a short period of time anyway. They may be able to buck the trend, and the price may be up by a few percentages, 5, 10, even 20%. So Revain's up by 20%, for example. But apart from that, really the market has been following Bitcoin, and it has been in the red. It has been a, you know, awful crypto weather for most people. I mean, especially after we saw the investor optimism, you know, hoping that because it's a new year and new developments in the horizon, new announcements to look forward to, that you know, psychological 4,000 level that was broken and had tested 4,700. It just couldn't hold it. There wasn't enough volume to sustain the push by the bulls. So it is, where we are right now is, as I said before, it is very, very risky, dangerous. And as we're near the bottom, expect a lot more volatility, expect bull fakes, expect dead cat bounces. You know, they're basically trying to manipulate and find ways to trick, fool some investors into thinking that it is the bottom and that we may see a reversal. So unless we have some important announcements, catalysts, some real concrete development affecting the entire market, as well as BTC, something that will add value on the long term, you know, in the long term, and be able to, you know, increase adoption rate, allow real world use cases to come to the fore and be, you know, given a platform or given opportunities to grow, that's correct. Yeah. So, you know, these things we have to be, you know, fully aware of. We're still in the midst of a crypto season, and I mean, crypto winter season, and you know, we just have to ride it out. It is a cycle, as we keep saying. It's we're in the in the territories of the bears right now. They have control, and so yeah, it's right now. I don't see where's the volume? I don't see any sustained volume, and by default, if if there's uncertainty in the market, if there's not enough, if there isn't strong, sustained investor confidence and optimism in the market, then I don't see how we're going to have any sort of turnaround at this point. And that's why we have to wait for especially the first quarter of this year, where we are expecting several announcement developments. And the two key developments we're waiting for, BACT. January the 24th is scheduled to be launched, and with the February the 27th, was it, I need to check the date again, but at the end of February, the SEC will be making that final decision. They only have 240 days to extend a decision, and that is it. That will be the final cutoff point where they have to approve or deny the VanEck SolidX CBOE backed BTC ETF. And that most definitely, in my opinion, if it does get approved, will have a significant impact on the price of BTC, and consequently the rest of the market as well, as it pertains to the regulatory aspect, the ability to have these federal regulated exchanges and institutions be able to have for the first time have the futures physically settled with Bitcoin rather than cash is a game changer. So that is what the market is waiting on. And anticipation as we get closer and closer to end of February, I do expect the market to make some moves prior and after the decision has been made as well. So I do see, I mean, I'm not in the prediction business, and this is not financial advice, but I look at all the research, I look at the evidence and stats out there collectively, and make a educated analysis and forecast on it. And from what I can see, unless we see some sort of injection into the market, something that will sustain the volumes, and it has to be more than once. It can't just be a whale dumping their money here and there, or just a few isolated events. It has to be consistent. It has to be sustained, and that's one of the things I'm looking for, as well as positive developments that affects the market. I'm looking to see if the movements that I'm going to touch upon whales, by the way. That's something which the market was spooked by, and I do anticipate some moves to be made by them over the next 3 months as well. And so anyway, so I do expect if it doesn't sustain it where it is, if it doesn't hold on to that level where it's at right now, the 3,560 something, then I do foresee it going back to that low that we experienced, that 3,100 in December, and I do expect that to be broken. That 3,000 is also a support level. So if we breach that and go into something like 2,800, that is definitely, there's very weak support there. I don't see how the market will recover. However, having said that, there is, when you look at the buy walls on some of the exchanges, and from what we've noticed with when the price went to 3,100, there is some level of demand from buyers who are just itching, they're waiting to stack up on their BTCs, and from that point we may see the market go sideways for days, weeks, even months, potentially. So we're going to see how strong the support is in reality when the prices are retested as low as that. So we definitely need some good news very soon for the market to you know, have some level of faith and optimism in the near future. But yeah, we do have, I'm going to touch upon Constantinople. That's due between well, actually on the 16th, 2 days from now, for the hard fork to be launched, but it could be any point between the 15th and 17th, because it depends on the block number that it needs to, the target block number that it needs to reach. So, but it's expected to be around the 16th of January. So yeah, so that is, you know, from what we've seen with BTC, losing something like 13% since the point where it reached the highest point this year was something like 4,060 something dollars. From there to fall to where we saw it go to 3,530 something, that 13% drop is spooking the market. And also because we have seen whales, some level of movement with wallets that have previously not been activated for quite some time, and some of them are not even recent ones. They're, you know, quite a while back. We're talking years, and I'm gonna get into that soon. But yeah, Bitcoin within the last week or so, losing more than $500 in value. That's you know, in a bear market, you have to expect that. It's no surprises because of the lack of volume, lack of positive sentiments, and you know, lack of clarity on the regulatory front. And yeah, I do expect I'm more on the bearish side. The probabilities for it going to 3,000 and retesting even 2,800 is becoming more and more possible. And it doesn't even it's not even better in traditional markets either. If you're looking at, I mean, today, for example, Dow Jones, Nasdaq, S&P 500, they dropped. And there's still fears of, obviously, you guys are going through a partial government shutdown, 24 days into it, I think. It's the longest period ever. And, you know, there's, what do you call it, imbalance with the trade deficit between China and the US as well. And just, you know, bearish indicators wherever you look right now. It's just, you know, a nerve-wracking time to be an investor in the traditional assets and with cryptos, unless you have a long-term, if you're a hodler and you're a long-term investor, then you're not as nervous as the others. And so that is part of the process where we are right now. And as I said before, I do believe it's heavily manipulated, because if you look at the all the resources, all the time and energy spent building the ecosystems, infrastructure, all types of value being added into the industry, it's not reflected in the price. And that during 2018, you've actually had certain metrics rise is on the increase, like the number of ID verified accounts and you know, crypto ATMs on the rise, and awareness on the rise, education on the rise, centers and events being established and growing all the time, more clarity being given by governments and businesses and organizations and so on, and more developers, engineers and coders, and you know me, still being high. The numbers, the job postings still rising, and there's more files being patented and there's been more patent filings as well, and so on. So you can't ignore all that addition into the industry. That's going somewhere, that's building part of the infrastructure, so we can't ignore that. And so speaking of whales, I did want to touch upon that, because I wanted to give you Twitter, a Twitter page for you guys to follow. And it's really you know, you could set the alerts on that or turn it off if you don't want it, but it is actually really eye-opening to see the level of volume sometimes that goes into these exchanges, and the type of assets that are being liquidated. And so if you grab a pen and paper handy, or if you listen to this video, again, you can, if you take this down, it's a Twitter handle, and it's at whale_alert, at, so the at sign, then the word whale, WHALE, underscore, so at whale_alert, ALERT. That is where you'll be able to see live tracking of large crypto transactions, and it's transactions moving to and from exchanges. So it's going to show alerts for Bitcoin, Ethereum, Ripple, EOS, Stellar, and top USDT as well, and top 100 ERC20 tokens as well. And I think they've got something like almost 44,000 followers. So it is quite substantial. But yeah, you're going to be getting alerts all the time, seeing how much of the different tokens are being moved. And that's really another indicator as well to see, to expect more price volatility, or to know that it's something significant. It's significant enough of a time to warrant some sort of action. So whether they buy, sell, transfer, at least you could be, aware, and just have your contingency plans ready. Or if you're a trader, you'd be looking to see if you can find any advantage and trade any potential upcoming dump that happens, or if you want to go long or something. All up to you, all depends on your strategy. So what's been fascinating with this is that the number of active Bitcoin wallets in particular, many of them have stayed dormant. They haven't been used for quite some time. So there's now been some increased activity on them, and this may mean that we're going to be facing some major market movements in the near future. And it was Flipside Crypto. It's an analytics startup, and they looked at the data and analysis of these movements, and they have been tracking it from October last year up until now, and they've noticed that wallets, the ones that haven't been touched for quite some time, there's ones that haven't been touched from 6 months to 2.5 years, and they've started to transfer their coins over. Now, we don't know exactly what's going to happen, but the fact that even if you look at the wallets active over the past month, the fact that they hold over 60% of BTC's circulating supply, that's quite, an eye-opener. And we have to look at the fact that at this particular time, maybe there's going to be some whales that decide to dump to spook the market, to buy back another point, or it could actually be to they may have other coins, and they may want to diversify their portfolio. They may want to do anything, and whatever the strategy may be. But the fact that we're seeing this increased number of transfers is what's concerning the market, and it's part of the reason why they got spooked. I do foresee, it doesn't make sense in my eyes for them to be dumping right now, but you never know, and anything is possible right now, and it will be more and more volatile as we get to the bottom, as we reach the bottom. So the fact that the supply of active Bitcoins, it has gone up by 40%, something like that, since last summer, is incredible stat. So that's definitely a major shift to look out for. And the way I see it is going to bring more volatility to the market. And if you're a trader, that's great. If you're a long-term investor, you're not going to be too worried. But if you're a retail investor, that you know, some of the weaker hands will be shaken out. Unfortunately, that's the way things go. I don't think we've seen real despair yet. So it'll be interesting to see if they use those funds to manipulate the market to take it potentially up to 2,000 or even 1,000 Bitcoin price level, or whether they're simply looking to consolidate somewhere else, or buy up more coins, or do something else. So it'll be interesting to see what happens. And yeah, that's one of the things. So that Twitter handle will give you, I guess it's like another tool to your arsenal, give you an idea of what kind of transfers and movements are happening to the exchanges. So, you know, and that is one of the things to look out for, and just be aware, not be scared by it, but just be aware. And yeah. And the fact that they're now these wallets are being activated, and they're woken, I guess, activated, is definitely a clue, and it's basically a heads up. And here's another thing as well to be aware of, is that about 1,000 addresses, Bitcoin addresses, they control something like 85% of all Bitcoins. 1,000 addresses control approximately 85% Bitcoins. And you know, they do include early investors, and they have remained dormant, inactive, even during the point where we saw it go to the all-time high of 20,000, and when it went when it crashed in 2000 last year, go to all-time lows as well for 2018. They still didn't touch it. It's just now that they're beginning to decide, I'm gonna have to change some strategy, something that they're thinking of doing. And is that because they are expecting certain developments around the corner, maybe with the regulatory approvals? Is it because of, you know, other matters? Who knows? So this is why we have to put two into, like, it makes you think. You'd think you'd sell at when it's at all-time high, but right now at 3,000, excuse me, 3,500. What is it that they know that we don't know? It's something that we have to watch and look at what they do, and use it as part of our strategy, part of our tools. Excuse me. So yeah, but don't dwell too much on it. There's a lot of things going on at the same time that can affect Bitcoin's price, the crypto markets value, and I do see a lot more pain coming forward. And you know, with other companies as well that have looked at other analysis and other data relating to Bitcoin wallets. You even had sometimes I can't say the word, chain analysis. They published their study into 32 largest Bitcoin wallets, and they said these 32 wallets represented something like 1 million BTC. And at the time they did the research, I think it was last October, that was worth $3.7 billion. So that gives you a clue that a lot of these BTCs are concentrated in these wallets. However, where, you know, if they decide to dump, I doubt that they're going to dump all at the same time or anything like that, because some of them may be organizations, some of them may be individuals, and even governments as well. So we just don't know what their motives are, and you know, whether some of them will be in for the long term, or looking to manipulate prices in the short term, and so on. There's no way of telling until they decide to move these funds and, you know, either dump it on exchanges or transfer it to other separate wallets. We're just going to have to wait and see with that. But the fact that there's so much concentrated on these wallets, the amount of Bitcoin there, it does give some people concern that it may be, you know, a little bit more centralized than it should be. Because the whole idea of Bitcoin and cryptos, decentralization, is to get away to not have third party control, to not have monopolistic, you know, type of structures, or the way it operates. Excuse me. I'm just gonna put the charger in. So yeah, it is interesting to see how they move and what, you know, it's part of the game, I guess. And we're sort of used to this now, price manipulation. We know, I mean, the majority, I'm just guessing now, but I assume that the majority of people watching this do know, they have seen all the developments happening in the space, and it's undeniable. This is something which, regardless of where we are in the market cycle, there's still projects going ahead with their plans, and investors still in the market. Like I said, all those different positive developments happening, and eventually price will catch up to its true value. And, you know, we want to be way before, early to the game, way before it turns around and goes on another bull run, and creates another all-time high. So we are definitely in the right place right now. We just need to hold tight during this difficult time. And yeah, so that tracker, that whale alert tracker, will definitely help as part of your strategy, as part of your tool, to see, you know, if you have, I think you can separate the alerts if you just wanted alerts on BTC, because as we know, the market does follow its price movement. So if you just wanted BTC, or just BTC or Ripple and ETH, that's cool. And you set it up, and, you know, some of the things that I've seen, I definitely, from where we are right now, I do expect more volatility. There's no doubts about that. And I do expect more and more people to get more nervous, get more frightened, as the market will test our steel, it will test our resolve. So yeah, it is gonna get worse before it gets better. That's where I stand right now. But the long-term prospects, absolutely incredible. I know I'm going to sound so biased right now, but I'm looking at the evidence and the stats, and the proof, literally proof of work everywhere you look. Proof of work, proof of success, proof of care, proof of community, you name it. I'm seeing the proof in all in different manifestations that you know, there's real value, there's advantages in the space, and yeah, it's only a matter of time before price catches up. So that's another, yeah, so that's what I wanted to mention. And then Bittrex, they've decided to launch over-the-counter trading platform. Remember, over the last few years, one of the ways that the institutional investors have been purchasing, accumulating cryptos, has been over-the-counter trading. And basically, these over-the-counter trading desks, they facilitate direct transaction between two parties, and it's different from an exchange. So with an exchange trading, yeah, where you have buy and sell orders, they're basically matched through an order book. So this is why they're finding it far easier, convenient, much better to deal with, rather than go through exchanges and whatnot. And the over-the-counter trading desks, they are there to specifically to act as bridges. So they smooth the rough road for them. They make it more user-friendly and they know how to work with that particular, they know the needs of the clients. Institutional investors are a different breed, so that's why they're having more and more success, and especially 2018 has been a record, surprisingly. And even with Circle, as you know, Goldman Sachs had backed that. Their OTC trading desk, they made $24 billion worth of trades last year alone, and that's not going anywhere. You may think that bear markets spook some investors. You have to understand that institutional investors, they make, sometimes they make markets, they move markets, they create that they manipulate markets to be able to create opportunities for them. It's a unfair, it's not a level playing field. So they essentially own the game, create the game, and or if they don't, they try and tilt the rules in their favor. They bend the rules or find ways to be able to do it legitimately. And so that's why this bear markets doesn't scare them at all. They've got time, money, they've got resources. This is something that they want to see how it could work for them long term. And so this is why we're seeing a lot of these exchanges come out with their own version. The over-the-counter trading desks. Coinbase is in the process of rolling its own out. Excuse me, Bitfinex launched their own platform back in 2016, and we're seeing more and more over-the-counter trading. Excuse me, over-the-counter trading desks being launched worldwide, not just in the US. So this is something I expect to continue flourishing and be ready for when the time comes, when they do have a regulatory approval on other areas like exchanges, federally regulated exchanges, to be able to do Bitcoin settled futures, for example. That's another institutional grade tool, another institutional grade infrastructure that has been built especially to cater to them. So the more they do this, the more the proposition will be attracted to them, and the more willing they will be to bring in their billions, and at some point it'll be worth trillions of dollars. the capital that they'll be bringing in, and with this particular offering, with Bittrex, they'll be offering over 200 excuse me, over 200 crypto assets. So that is definitely a good good choice to have. Yes, yeah, I didn't even get any water ready, Brandon, but yeah, so it's going to be definitely popular option for institutional investors. And excuse me, and there was something I was going to say. So it's not just for anyone that people can do over-the-counter trading. There's usually a limit set. So for example, with Bittrex, they're going to do $250,000 worth. The trades have to be worth $250,000 or more. So and the fact that they have a guaranteed pricing structure, again, is going to be important for institutional investors. And another thing I'm seeing as well is that because of this gray area, we still need some regulatory clarity. You're seeing exchanges now separate and having an international trading form and having a domestic trading platform. So this is really this is really to protect their interests, making sure that they comply with local laws and that they're not going to fall into the trap and be cracked down by, have a crackdown done by SEC or CFTC or any of the regulatory bodies. So again, definitely a good development for the market. in terms of helping to have more choice, more support for institutional investors to be able to come in. However, it's not that good for retail investors. It's not really, what can I say? Because if there's going to be more price manipulation, if there's going to be more protection for institutional investors, and I do worry about the imbalance, how that will affect the rest of the market, the rest of the industry, and I don't think it will be good. But if it helps speed up adoption overall, if it gives confidence to other stakeholders to come into the market and help to build the infrastructure, that will help the market to some extent. But philosophically, ideologically, I'm not too keen on institutional investors coming in to control, to try and influence, control, and manipulate the market in whatever ways, tools, and methods that they have. Because I am concerned about the bad habits that they're going to bring with them from traditional markets. So it's, it really is a double-edged sword, but, it is happening regardless whether we like it or not. So it's another thing that does legitimize Bitcoin. It is here to stay, and it is being taken seriously. And they will find ways to be able to make it work for them and derive advantages from them. And so that is Bittrex, and I do expect more to come through. Speaking of exchanges, Gemini's owners, Winklevoss twins, they came out and said stable coins and tokenized securities are the future of crypto innovation. I do agree with that in regards to stable coins, absolutely, because it is pegged to something of value, is pegged to commodities or pegged to other resources that are of value in some market. So that I definitely agree with, and it's going to be interesting to see how the market reacts to more and more stable coins backed by oil. As I said before, stable coins potentially backed by water, stable coins backed by a lot of even stable coins backed by coal, precious resources such as coltan, for example, that I definitely can see happening. And really, here's the thing, the ICOs that we saw, the ICO mania that we saw back in 2017, you've had a lot of you had some good projects, but a lot of scams and really shady projects, people that just literally wrote a white paper within a few days and issued a token and put any idea behind it and managed to raise hundreds of thousands, even millions behind it. And they see that as the pets.com of our industry, the ICO mania, and that with tokenized securities, now that we're seeing that the SEC and other regulatory bodies are looking to crack down and find, basically try and find ways that they can, without stifling innovation, it's really to help protect investors from getting scammed, but having securitized, having a different asset class that's separate from the definition of traditional securities, that's going to help the industry a lot, and to be able to basically evolve the ICO world and have another way of raising money and raising other resources and so on. That's going to be important. And definitely real estate is one thing that is being tokenized and being sold off. And the fact that, you have a lot of investors worldwide wanting to buy property and have real ownership, and when I say verifiable ownership, something that cannot be changed or edited, or like, if they could use the blockchain to do that, so they'll be able to have the security features, and have the convenience of it. It's fast, it costs less than the traditional ways of doing business, and being able to exchange on properties and so on. The fact that it's liquid is super attractive. And we're going to end up seeing all manner of valuable assets and things out there that we cherish being tokenized, being on the blockchain, and sell it to whoever we wish, any part of the world. So that is something that we're going to see. It's not just the Gemini, the Winklevoss twins that are pushing this, but a lot of other leaders, and stating that we are going to see more and more assets being tokenized, and we are going to see, these assets being securitized and have different definitions for us. So that is something where I definitely agree with, this, especially with stable coins, because we are going to have some level of that is an age-old problems, age-old problem for retailers in particular. When you're buying goods, or having services or something, if you want to pay with cryptos, the problem with the price volatility is always going to be an issue there. So having acceptance with stable coins, or have something, a company that insures, or are able to guarantee that they can accept a certain price, and they're willing, if the price goes down, they're willing to foot the bill with the difference, so the costs don't get passed on to the end user, to the consumer. Rather, it's eaten up by the providers, the merchants, or the company facilitating the transactions. But with stable coins, since they're pegged to another asset, they're less volatile, and they're a lot more trusted. So that's why I think they're on the money with this. It's definitely going to end up, if you look at the amount of stable coins just launched in the last year, to give Tether a run for its money, it's actually a blessing in disguise. So expect more of that. The only type of stable coins I don't like, as I mentioned before, are the ones that are centralized, that could be turned off, frozen, reversed. Those are the ones that I'm not, I don't believe in, and I wouldn't use. But having said that, the problem we've seen with Tether is the perceived opaqueness, the lack of transparency with the people that are behind it, and that's another thing. If, as long as there's transparency, and it's could be audited and can be verified, stable coins are definitely they definitely have a place in the industry. And they act as a bridge toward between the fiat world and the crypto world, and that's definitely the way to go for now, until the market matures and volatility is reduced, and that there's more adoption and more acceptance in the market. And so yeah. So another thing that happened was Vermont state. I think it's a tiny state on the East Coast. They decided to launch a blockchain pilot program for captive insurance industry as well. Now we're going to hear more and more of these states coming out to do test pilots. Do test runs, and with the insurance industry, with the food industries, they love the fact that they can have real savings, money wise, the fact that they don't have to use archaic systems anymore that take time, money, resources, labor, you name it. And this is something that we're going to end up seeing other states adopt in their own way, and I know that with State Farm, excuse me, way back, December, they launched they launched a blockchain powered pilot as well. And again, this is something I expect for this area to grow, because of the advantages that they get. Excuse me. And then yeah, you have other countries as well applying it to especially for supply chains, for industry, automotive, also with oil. There's so many applications that they can apply, they can use, and it just speaks for itself. Once they see the advantages gained, I don't see how they're going to look back and do what they used to do. And then you had Malaysia. Malaysia decided to come out with their regulations on how to classify digital assets and tokens as security as well. And in fact, that goes into effect tomorrow. Excuse me. And this is another thing that we're going to see. A lot of these countries are going to end. You know, we've seen it with Malta, we've seen it with South Korea, Japan, Switzerland. They're going to come out, and Thailand as well. And we're going to see more and more of them come out with more clarity on where they stand, what they consider, you know, what the definitions will be, how it will be treated. And the fact that, here's the thing that worries me, is that if they require people to register their details, as is the case with Malaysia, for example, the fact that they're going to give their names and numbers and so on, I don't like the idea of that. Even with Denmark as well, their tax agency is saying that they're going to have to collect data from crypto exchanges. They're going to be taking tax numbers, names, addresses, and that's concerning to me, because it's basically a slippery slope into more, you know, more. They're basically going to be Big Brother and monitor our financial affairs, and that's something I don't agree with. We're trying to get away from that, being in this space, and you know, unless it's you know, they have some you know, concrete evidence to say that that person could be a criminal, that agency or organization maybe, you know, acting fraudulent, then they may get a warrant to get these details and whatnot and subpoena them. But for your everyday person, everyday investor, it's for me, it's an intrusion of privacy, but also concern that they may be able to freeze your assets, you know, freeze your accounts. Any number of ramifications can happen if they're tracking, asking them to hand over all their details, personal details, that I don't agree with. So that's something that they're doing as well with Denmark. And excuse me. And then what was fascinating is Ethereum Classic. The hacker that took a significant, the person who did the 51% attack on Ethereum Classic actually decided to return $100,000 in stolen crypto, but they still kept like 1 million crypto for themselves. So, you know, that's not really, like, if you're gonna, you know, return crypto, return all of it. Like what? So it's so it's a bit surprising that they did that, but I think what they were trying to do was essentially warn the industry that you need to beef up your security. And it's more like what these you have these type of hackers that take away funds or money or whatever, and they return it. Those are the ones that are basically trying to warn you of if this gets into the wrong hands next time, there's no telling what may happen. So the fact that they return some, I guess it's okay. It's good. I don't. I would prefer if they just returned all of it. Then I'd know that they meant what that their gesture's real. But the fact that they returned one, I mean, they kept $1 million to themselves. Still, I mean, the temptation must have been too much for them. But you know um it's still it still spooks the market, because we're at this area right now where even with a lot of the coordinated global responses that we've seen to try and beef up security, there's still ways that these hackers can come in and exploit loopholes and vulnerabilities in different projects and protocols and systems. So again, this is a good way, I guess, to warn not just Ethereum Classic, but other developers that they need to up their game. Also, exchanges need to, spend more money and spend more resources tackling the security breaches, the potential security breaches that may happening, and problems. Basically looking at the vulnerabilities and seeing if there's any way they can prevent it, and double down on that. So again, it's going to be part of where we are in the industry. There's still going to be mistakes made. There's still going to be hacks. There's still going to be scams. And so whilst we're in this process of improving on that, if you remember dial-up, our dial-up days weren't so pretty. There were still problems, other glitches and crashes that happened during the era when internet was a toddler, I guess. And for it to have the growing pains as you grew up and became a teenager and to a mature adult, you're going to have mistakes, you're going to have challenges throughout it. And I hope that we take lessons from these incidents. If we're not directly impacted and affected, and we haven't lost any, we haven't been victims of hacks, we can always take individual actions to always review and find ways we can beef up our security and use common sense, things like not using the same password for all of our accounts, and making sure we have two-factor authentication and so on. Not make it harder, make it more difficult for someone to hack your account. Like, if you do as much as you can to prevent that. I know we can't control what happens to the exchanges, that's their responsibility, but obviously don't leave all your funds in one exchange, or any amount of money that you're not willing to lose on any exchange, as you do not control your private keys. Anything that if you're not holding on to your own private keys somewhere secure, in a air gap hard drive, air gap computer, or in a hardware wallet, then you're basically, the risk does increase, of if you do get hacked, your risk does I mean, you do raise the risk of exposing yourself. So if any hacker does come through, you're just making their lives much more easier. So this is the whole point. We can't get rid of every single potential hack and stolen funds, but what we can do is take sensible precautions to make their lives a lot more harder, and find ways to deter them, so they just cannot be bothered to do it. They'll be just like, I'll find another easier victim and go somewhere else, or they'll just stop for a while and resume another time, or just stop altogether. But anyway, the fact that this hacker did that, came back to return some of the funds, I guess is I don't know what they were playing at, but I guess it's at least they got some of their funds back, right? It's a silver lining, but if anything, they should take the lessons for that. That's the most important part. So So that was Ethereum, and then you had another institution come out with their over-the-counter custody solution as well, and they're the first Swiss bank to do so, Vontobel. And again, this is something. I mean, I feel like I've been saying this for almost a year now, that we are going to expect more and more custody solutions to